Welcome everybody to my channel. Today is January 18th, Monday. Thanks for joining me. Hope you had a good weekend. If you're new here, I'd appreciate it if you consider subscribing to my channel to stay up to date with everything going on right now with the coronavirus and the pandemic. And if you are here, or if you're not new here, if you're returning, thanks for joining me again. Welcome back. And be sure to smash that like button if you find this video helpful, and share it with your friends or family that you might think also might find it helpful. All right. And also, one more thing, leave a comment below if you have any questions or concerns, and I'll do my best to try to answer them. It's a very busy time for us right now, so I'm sorry if I don't get to your questions or comments, but I will do my best, okay? So today I'm going to talk about the Employee Retention Tax Credit. Now this credit was first introduced by the CARES Act back in early 2020, and then it was quickly forgotten about by most people because of the PPP and EIDL. What is this credit? This credit is for employers who continue to pay their employees even though the government mandated a shutdown, or made them shut down, or partially shut down, or whatever it is, or if they lost over 50% of revenue comparing a 2020 quarter to a 2019 quarter. So this was the credit based on the CARES Act. Okay. Now, if you received the PPP in 2020 and then you subsequently got it forgiven, you will not qualify for any of the Employee Retention Tax Credit. And that's why this credit was quickly forgotten about, because the PPP was a much more popular program. And if you can't have both, then people are going to choose the PPP. It's a much more simple process, and you probably get more money with the PPP also. That was a problem with this tax credit. However, now with the new stimulus bill that was just passed, that changes everything. It changes everything. Okay, so the credit still exists as it does in the CARES Act, but there's been a lot of rule changes and eligibility changes for this credit, and it makes the credit much more attractive and much more usable to many businesses, especially even if you got the PPP. All right, so I'll go through those changes right now. So the Economic Aid Act retroactively puts these changes in effect back to the date of the CARES Act. So the first change here is if you receive the PPP and then subsequently got it forgiven, you can now still qualify to receive the Employee Retention Tax Credit. The only difference is that if you receive the PPP for, like, let's say the month of April, and you use those funds for your salary for April, then you can't use those wages of April to qualify for the Employee Retention Tax Credit. I'll go over how the tax credit works here in a sec. Also, this new bill has included health insurance premiums as part of gross wages when determining the tax credit. And also it extended the expiration date of the credit to June 30th of 2021, while this credit used to expire December 31st, 2020. It's increased the amount of the credit, and it's also decreased the eligibility requirements of the credit. Okay, so how much of a credit can you get? When it was first introduced by the CARES Act, you can receive 50% of wages up to $10,000 per employee. That means that your maximum credit per employee was $5,000 for the year. Okay? And that's only if you meet the eligibility requirements of the revenue loss, or if your business was a part of a required shutdown. Now, this new bill has increased that amount for the 2021 year only to 70% of wages up to $10,000, and that's per quarter. So there's 2 quarters in 2021 until this credit expires. So you have Q1 and Q2, and you can take a maximum of $7,000 per employee per quarter, which means that each employee can get you $14,000 of credits as long as your business meets the eligibility requirements. Now that's pretty huge. And this also includes, if you receive the PPP, you can still get this credit, but obviously not if you get the PPP funds. You can't double dip on the same salary periods, between the PPP and the Employee Retention Tax Credit. So the CARES Act did state that you had to have a 50% revenue decline year over year when you're comparing the same quarter. But with this new rule enacted by this new bill has changed it to a 20% decline only year over year. And this also increased the number of eligible companies, because The original bill states that companies with under 100 employees can qualify for the credit, but now companies with under 500 employees can qualify for the credit. So what does this mean for you? This means that if your business had a decline in revenue in any given quarter, then you may be eligible for this credit. That means that if you pay your employee's salary or your self-salary and you had this 20% decline in any given quarter, then you can take your gross wages for that quarter, multiply it by 50% if it's in 2020 or 70% if it's in 2021, and that would be your eligible credit, capped at $5,000 for 2020 and $7,000 for 2021. Now, if you did not have a decrease in revenue, but you had a temporary shutdown, like your business was temporarily shut down due to government mandates, then your credit only applies for the period that you were shut down. So let's say you were shut down for 2 weeks, but you continue to pay your employees their salaries for 2 weeks, then the credit would be based off of their salary for those 2 weeks, okay? So the credit is obviously much more favorable if you had a reduction in revenue, but if you didn't, you can still get something if your business had to shut down due to government mandates. To claim the credit, you have to file Form 7200 from the IRS. It's a way to claim the credit in advance, so you don't have to wait for your annual tax return or anything like that. But you would file Form 7200 to claim, this is the amount of credit, this is the amount of wages that you paid that were eligible for the credits. These are the reasons why you're eligible, and this is the amount of credit that I should receive, okay? Now, if you have any issues or any questions, you can contact us or your CPA or your payroll company that you're doing payroll from, and they should all be able to help you there. Now, because of this new change, this credit has been completely expanded and much more valuable, much more worth looking into. And that's why we're doing a video on it now, because it's just something that you really should consider. Are you paying your employee's salary? Did you have a reduction in revenue, or were you part of a government mandated shutdown? Then you should definitely look into this credit. Okay, that's all I got for now. Thanks for joining me. Again, if you found this video helpful, please smash the like button and share it with your friends and family who you think might find it helpful also. And also, if you're new here, please consider subscribing to my channel, and I will keep you all up to date with everything going on right now as best as I could. All right, have a safe week. Take care.
I'm in the mood for a switch up. I hit the function, hit the rose till I hiccup. I hit the stage and leave with money that's a stick up. She picture perfect, so I told him I'm a flick up. Bill, I'm in the mood for a change up. I leave the city and return with my change up.